I've seen a lot of articles and headlines recently talking about a recession coming. Is it true? Well, that is what we're going to talk about in this video. And long story short, no. Growth is slowing, but there is no recession coming. But let me tell you why. And of course, to help us, we got Alex from MacroOps and his market brief that he just released. And in one of the sections, he talks about how growth is slowing, but we are not going to go into a recession. So the first indicator we could look at is the Conference Board Leading Economic Indicator. And the LEI is basically a composite of 10 leading economic and market indicators. And this thing is given an advanced signal of all 8 recessions since it was created in 1959. This is the LEI right here, this yellow line. And on average, it peaks 10.5 months before the start of a recession. See, it peaked here, peaked back here, all before these recessions, which is the gray lines over here. And as you can see, it's not peaking. It's still heading higher and to the right, which means a recession is not on the short-term horizon. And this chart right here shows you the average annualized equity returns depending on where the LEI is. So if the LEI is below 0 but rising, so like over here or right here, then you're looking at almost 30% returns in the market. If it's rising and it's above 0, 11.8%, and that's actually where we are right now. If it's above 0 but falling, that yellow line is coming down, then you're looking at close to 0 returns. And if it's below 0 and falling, I mean, that's the worst case. Equity returns are negative, over 11% negative. But like I said, it's going up and to the right, so that's a good sign. Next, we could look at the labor markets. So this is the Conference Board Employment Trends Index, and it combines 8 labor indicators, and you get the same sort of yellow line. So you can see that even though it peaked in August of last year, it's still holding up. It's flatlined, but it's not turned negative yet. When it starts turning negative and going lower, like you see in these past scenarios right here, here, and here, that's when you get the recession, which is once again the gray lines. This is holding firm for the most part, so we don't got to worry about the recession. Next, we can look at real retail sales, which gives you an idea of how the economy is doing. Currently, as you see with this yellow line, it is still positive. Growth has slowed, but positive is still a good sign. If this thing turns negative and starts crossing the 0 line, then you got to be worried. But it hasn't happened yet, so there's nothing to worry about yet. Next thing we want to look at is liquidity, because remember, liquidity is the #1 most important fundamental to markets. One way to look at it is through the Kansas Fed Financial Stress Index, which is comprised of 11 financial market variables. It's this yellow line right here, and as you can see, it is pretty low. You run into issues when this thing starts spiking, like it did here in 08, and that's where you could expect the recession. It being low and muted like this means easy financial conditions, which is what you want for a bull market. Remember, we'll see this spike if a recession is coming. Next, you could look at the Chicago Fed Adjusted National Financial Conditions Index, a mouthful. It summarizes 105 indicators of financial activity. So as you can see here, it is pretty low and even trending lower, just like the previous chart we looked at, which means that financial conditions are easy, even after having all this volatility in the market recently. That's a good sign that the recession isn't coming yet. Now, even though everything looks good, we still think that real GDP growth is going to decrease. This year, we think it's going to come in around 1.5%. So like we said, growth is slowing, but it's not a recession. So Alex explains that slowing growth is not a recession, and a low growth, low inflation economy is not a bad environment for risk assets, as Stanley Druckenmiller has pointed out numerous times. And you guys know Druck is the best, a legend. If you want to learn more from him, click this link right here. I got a whole playlist from lessons from him and other really smart market wizards. So Stan says the major thing we look at is liquidity, meaning as a combination of an economic overview. Contrary to what a lot of the financial press has stated, looking at the great bull markets of this century, the best environment for stocks is a very dull, slow economy that the Federal Reserve is trying to get going, right? If the Fed is stimulating, that is good for stocks. That's been most of our bull market since 09. But once an economy reaches a certain level of acceleration, the Fed is no longer with you. The Fed, instead of trying to get the economy moving with, more stimulation, reverts to acting like the central bankers they are and starts worrying about inflation and things getting too hot. So it tries to cool things off, shrinking liquidity, because that's the Fed's job, right? To control inflation. So if the economy gets too hot, they got to pull it back. And then at the same time, corporations start having to build inventory, which again takes money out of financial assets. Finally, if things get really heated, companies start engaging in capital spending. All 3 of these things tend to shrink the overall money available for investing in stocks, and stock prices go down. So that's why a low growth, low inflation economy, that's perfect for stocks, because the Fed is going to keep stimulating and they're not going to stop. And as we've seen, that stimulation is great for pushing up paper assets. It causes that wealth disparity like we talked about in those Dalio videos, but if you got money in the market, it's good for you. And one more thing that Alex likes to look at is US profit margins, because those are a good signal for a recession too. So we can see on this chart that they peaked in 2012, but they're still holding up pretty well. They haven't turned negative. When you start seeing margins compress, that's when you see a recession too. So you don't want this yellow line falling too hard. Now, a lot of you in the comments after we do these types of videos, you ask me how we do this analysis. Well, it's taken a lot of years to get to this point at Macro Ops. And Macro Ops, if you don't know, is the global macro research firm that I co-founded with Alex and Tyler, who I always talk about in these videos. Here we are. This is our team page. Look at us. So cute, so happy, so excited about macro. Now, in these videos, I give you a pretty brief overview of the research that Alex does. But the traders who are super interested in macro and are very serious about markets, most of them are professionals, they all joined the Macro Ops Collective, which I told you in the last video was opening up, right? Well, it's open this week. Now, I'm going to put a link up above in this video and down below to this page right here, where you could learn all about the Macro Ops Collective. Just a brief overview: when you join, you get the Macro Intelligence Report, which is our huge, big monthly report covering all the macro stuff and deep value plays. Then you also get the weekly market brief, which is one of the things that I just covered here. This is the brief that we just went over, just one section of it. There's a lot more that Alex puts into these things. You can see in this one, he talked about the trade war, regulations on big tech. He did the macro breakdown. Then he did the market update again, you know, the Marcus trifecta that we always do. Then he explained a bunch of his trade setups that he's tracking. So the Macro Ops trade intel is the other thing that you get. You get to see Alex's actual trades and portfolio. Then you get premium equity and sector research. You get a lot of personal evolution content, because you know one of the biggest things to being successful in the market is fixing yourself. That's why we talk about psychology, we talk about performance all the time, and we do a lot more of it at Macro Ops. And Alex is really the best guy to teach you about that stuff, because he's the one who's the ex-special forces guy. He was a scout sniper, just commando dude going on missions, crazy stuff. And now, just for fun as a hobby, he does all these crazy ultra marathons and condition events. He thinks it's fun. I mean, I don't know. I don't want to run 100 miles ever, especially not at one time. But he's all about that peak performance mindset, so he's into this stuff. And like I said, that's the reason why he's the best when it comes to the constant evolution type content. Then we've got the Comm Center, and that's our Slack channel where everyone in the collective gets to talk to each other, go back and forth on trades and stuff. And as I explained in the last video, in the Comm Center, these are all professional traders. They're all managing big money. So that's a lot of our clients' favorite part because of the community. There is really no other community like it. And then of course you get access to Alex, Tyler, and myself. But yeah, go to this page and definitely learn more about it. Markets are getting crazy. It's a good time to have someone like Alex behind you. But this is for advanced traders. If you're a beginner, it's probably not for you. Just because this stuff is pretty high level and it's more geared towards people who are professionals, who are doing this day in and day out. And there's no risk to check it out because it comes with a 60-day money back guarantee. So if you don't like it after you sign up, we'll just give you your money back. That's why the community is actually so strong, because the only people who stay are those that are like really doing this for real. There's no pikers playing around in the Macro Ops Collective. But if that sounds interesting to you, definitely check out the links up above and down below. Go to that page, learn more about it. And if you haven't already, make sure you subscribe to this channel and hit that notification bell so that you get an email notification when our new videos come out. Because if you check out the Macro Ops Collective and you're not too interested in it, that's just fine. We'll just keep hanging out on Fallible in my kitchen. It's a great place to be too. But okay, check out that page, subscribe, and I will see you in the next video. Stay fallible out there. Bye.